And in our top business story, innovative solutions and increased partnerships between the public and private sector have been regarded as critical for the sustainable growth of the Takaful industry. That's according to the experts gathered at the 9th Annual World Takaful Conference in Dubai. More than 450 leaders of the global Islamic insurance industry have gathered at the two-day event to discuss best practices for improving competitive performance and capitalize on the new growth drivers of the industry. Among the top discussions during the opening day was the return on equity based on the expected growth of the Sharia-compliant insurance Takaful, which is projected to reach $17 billion by 2015. According to the 8th Annual World Islamic Insurance Directory report published by Takaful Re and Middle East Insurance Review, the Takaful industry has witnessed 10% annual growth in the UAE over the last 3 years. However, despite the industry earning significant market share in countries such as Saudi Arabia, UAE and Malaysia, conversion into profitability remains a challenge. According to experts, the regional industry remains in its infancy and that it requires an integrated approach to achieve the full potential of the industry and sustain the quality of growth.
With respect to the Dubai Capital Islamic Economy Initiative, we undertake to launch a series of initiatives and programs through the implementation of which we can present Dubai as a global reference point. The Takaful and Takaful sector are important sectors for us in the Dubai Capital Islamic Economy strategy. The strategy revolves around 7 key pillars, Islamic finance being one of them. Today, we spoke about the potential that the Takaful sector brings to the table, but more specifically, the opportunity that lies in the Takaful segment, because the area is, underserved currently.
For the Sharia-compliant insurance providers, efficiency, profitability and scale have become increasingly critical to improve the financial performance in the industry. According to the experts, in order to manage the challenges of the competitive market, companies have to find innovative solutions to drive operational efficiencies. It was added that with favorable demographics and improved regulatory frameworks, the Takaful industry has the potential to surpass the conventional insurance industry in key markets.
Innovation, I would say, all the way. We are accused in our markets in the insurance industry that we are old-fashioned, we don't innovate, we don't do things, we don't look after the client with regards to their future aspirations. I think innovation is very important. I think we have a young audience to attend to, and the young audience are always expecting something that is, further down the line, so we need to be there. I think the Takaful providers should focus on clients, should be very client-centric, should make sure that the services and products they provide are very much specific and they actually respond to a specific need where the clients are. This should propel growth and continue the growth in the Takaful industry. But at the same time, those products should respond to a specific requirement that could happen in 2, 3, 4, 5 years.
The National Association of Freight and Logistics, NAFL, have announced the details of the Arab Union of Land Transport meeting to be held in Dubai on the 20th of April, where over 700 attendees from 15 countries will discuss the trends of the industry. At a press conference, officials from NAFL, the representative office of International Federation of Freight Forwarders Association, FIATA, announced the details of the conference, where the growth of multimodal logistics is expected to be discussed. High-ranking officials from the region's transport, freight, tourism and trading industry are expected to participate, including His Highness Sheikh Ahmed bin Saeed Al Maktoum, the President of Dubai Civil Aviation Authority, CEO and Chairman of the Emirates Group. The events will focus on enhancing operational efficiency in the logistics and freight industry, particularly with regards to utilizing multimodal solutions and developing infrastructure. Speaking at the press conference, officials from NAFL highlighted custom delays at the borders as a key challenge for the freight industry and that the discussions will aim to address them.
The most problem what we are facing, it is the problems at the borders for the land transport. This is the major one. When I have been in Amman last year, there is a record or data from IRU, which is International Road Union, says that 56% of any land transport trip, it is staying at the borders, and only 46% only driving. Can you imagine the delaying at the borders in the Middle East countries? It's more than the actual driving time for the shipment. So discussion, when we are going to discuss all these points in our meetings here, representing from all Arab countries, so we can, inshallah, we can reach to a point how to facilitate passing the borders without delaying.
It's a trip of 10 days because 5.6 days are the borders to clear controls. And now that's the soft infrastructure that we are constantly addressing to streamline. Now, if that 5.6 days came down to even 3 days as an example, because systems talk to each other, things are easier, the soft infrastructure, information flows smoothly, and the trucks can go through the borders. The cost of moving those goods are going to come down. The benefit is to the consumer. Energizes trade, energizes business. So those are the kind of objectives and initiatives that are constantly being discussed.
The euro was a star performer on the week, gaining 1.37% against the US dollar to test 1.39 levels. Some of the gains were paired, however, as several top ECB bankers said the exchange rate has become more and more important for price stability for the euro area and that further price appreciation could result in further monetary stimulus in the future. The comments saw the euro sell off slightly to start the week, and with it being a relatively tough few weeks for dollar bills, we earlier spoke to Gaurav Kashyap, the head of futures at Al Pari Middle East, to get his views on the performance of the greenback in the week ahead.
Well, it's shaping up to be a busy week on the economic calendar this week, with several high-risk events moving various currency pairs. Now, if we start with the US dollar, Monday sees the release of the US retail sales, which should be a bit favorable for the US dollar to kickstart the week ahead. Overall, we've seen the US dollar enter a bit of a bearish phase, over the past few weeks. It's been underpinned by a lot of weakness. We've seen a lot of currency pairs making gains against the US dollar, but overall, we can expect the US retail sales number to maybe kickstart a trend which could be a bit more favorable for US dollar bulls in the week ahead. Tuesday sees the release of the UK inflation figure. Remember, a slightly higher inflation figure from the UK could be a bit negative for the British pound, as this could increase speculation that the Bank of England Governor Carney could look at possibly increasing rates in his forward guidance speech in the weeks ahead. So overall, that could be a bit negative for the British pound. This is all capped off by Wednesday's GDP reading from China. Once again, this will continue to be a market mover in the week ahead. Any weaker reading than expected will have a negative impact on pairs such as the Australian dollar and the New Zealand dollar. But overall, the number is expected to be in line or slightly weaker, which could be negative for the Australian dollar. Finally, we move over to India. The Indian rupee has entered a bit of a bearish phase against the US dollar. We expect that weakness to continue. The USD INR rate should look to move probably down towards 61.47 or 61.50 on the DGCX, on the April contract that equates to 162.50 levels. So overall, we're liking the prospects for the US dollar in the week ahead. It looks like it will make some significant gains, particularly against the INR. And finally, we like a move in gold to upwards towards about 13.44 in the week ahead.